Welcome to the accounting cycle. Let's get started. Recall from prior modules that the accounting cycle starts with a decision maker engaging in an economic event. That economic event is captured by the accounting system, and then the accounting system produces accounting information, and that accounting information is provided back to the decision makers. We're going to take a more careful look about what goes on inside the accounting system and how it captures the economic events. For example, if we borrow $10,000 from the bank, that's an economic event. The accounting system needs to capture that economic event so that it's properly reflected in the accounting records. The first step in capturing that economic event is to analyze the event. In this case, we're borrowing $10,000 from the bank. We're receiving cash is an asset, and we're promising to pay back in the future. And that promise to pay back in the future represents a liability. The first step in the accounting cycle is to analyze the economic event. Once we've analyzed the economic event, step number 2 is to record that economic event in the journal. To record the economic event of borrowing $10,000 from the bank in the journal, we debit cash and we credit notes payable. The third step in the accounting cycle is to post to the ledger. Recall that the journal is a chronological listing of all the transactions, and the ledger puts all the transactions affecting a particular account together. So the transaction of borrowing $10,000 from the bank would be posted to the ledger by debiting the cash ledger and crediting the notes payable ledger. So step number 3 in the accounting cycle is to post to the ledger. The fourth step in the accounting cycle is to prepare an unadjusted trial balance. But before we talk about the unadjusted trial balance, let's put things into context a little bit. Recall that we have a periodicity assumption in accounting. That means that a business cycle is divided into artificial time periods, and we prepare financial statements at the end of each of those time periods. So here we see a beginning and an end. For example, the beginning could be the beginning of the year. The end of the time period could be the end of the year. Throughout that time period, economic events are occurring. They're being recorded in the journal and posted to the ledger. So all the economic events that are occurring during this time period are captured by the accounting system by recording them in the ledger, recording them in the journal, and posting them in the ledger. At the end of the accounting period, we want to make financial statements. But before we can make financial statements, there are some things that we must do. The first thing that we do at the end of the accounting period is to prepare an unadjusted trial balance. We'll discuss the unadjusted trial balance in more detail in this module. After we prepare an unadjusted trial balance, we prepare adjusting entries. Adjusting entries will be discussed in a future module. After adjusting entries, we prepare an adjusted trial balance, and then finally, after the adjusted trial balance, we can make our financial statements. Remember, the goal is always to provide information to decision makers. Financial statements is one piece of information that we provide to our decision makers. So the beginning of the period starts with economic events occurring, those economic events happening throughout the year. The accounting system continually captures those economic events by recording them in the journal and then posting them to the ledger. At the end of the accounting period, we're ready to make financial statements. But before we can make financial statements, we have to prepare an unadjusted trial balance, then adjusting entries, then an adjusted trial balance, and finally financial statements. But keep in mind that the end of the accounting period suddenly becomes the beginning of the next accounting period. So what we need to do to get ready for the beginning of the next accounting period is to prepare closing entries and a post-closing trial balance. The closing entries and the post-closing trial balance will be discussed in later modules. Once we've prepared our post-closing trial balance, then we're ready for the beginning of the next accounting period. Recall that we ended the last module with our ledger, with cash having a balance of $25,500, notes payable $10,000, revenues $3,000, equipment $5,000, common stock $20,000, and expenses $2,500. To prepare an unadjusted trial balance, we're simply going to transfer the balances in our ledger account to our trial balance. An unadjusted trial balance consists of all of the accounts and their ending balances. So we see first our cash account has a balance of $25,500, and our equipment account has a balance of $5,000. Then we see our notes payable is added to our unadjusted trial balance, and it reports a credit balance of $10,000. Our revenues are added to our trial balance, and it has a credit balance of $3,000. We also have our common stock with a balance of $20,000 and our expenses with a debit balance of $2,500. The unadjusted trial balance is a list of all of the accounts in our accounting system with balances. We see our debit balances of cash, $25,500, equipment, $5,000, and expenses, $2,500. Our total debits are equal to $33,000. We also have our credit balances in notes payable, common stock, and revenue. Our credits also add up to $33,000. The trial balance includes the ending balances for all accounts, and it proves that total debits are equal to total credits. So now let's review. The accounting cycle consists of the following steps. First, we analyze the economic event. After we analyze the economic event, we record the economic event in the journal. After recording in the journal, we post to the ledger. Then we prepare an unadjusted trial balance. Based on this module and previous modules, you should be comfortable with analyzing economic events, recording in the journal, posting in the ledger, and preparing an unadjusted trial balance. After we prepare the unadjusted trial balance, the next step is to prepare adjusting entries, then prepare an adjusted trial balance, and prepare financial statements. After financial statements are prepared, we prepare the closing entries and the post-closing trial balance. Steps 5 through 9 we'll cover in more detail in a later module. Continuing with our review, recall that the journal is a chronological list of all economic events recorded in the accounting system. The ledger includes all economic events affecting a particular account being grouped together. It includes the account balance. The unadjusted trial balance includes the ending balance for all accounts, and it proves that total debits are equal to total credits.